Hey, good morning. It's good to be back home. As most of you probably know, this was the first time in about 6 or 7 years where I took a complete break from the market, and for about a week or so, or a week and a half, I was completely disconnected from the markets. So, before we jump into today's zones, let's actually do a quick recap on what has actually happened over the last week and get up to speed with the underlying market narrative or the underlying story that's really been playing out in the market, which usually takes place in the recap videos and then gets updated in the trade plan videos. But because there has been this 1 week break, I think it'll be good to just catch up a bit. So we can see that about a week or so ago, we got a breakout attempt over here above this short-term balance. So this is the balance area that we're currently working with. And we got this breakout attempt, which failed because a larger time frame is still bearish. And I believe that day the idea was that responsive sellers can still be active. We had a zone up here at, I think, 1275 to 1475, somewhere along those lines. And ES ended up putting in a breakout attempt, which just completely failed. And once you have a failed breakout, typically the market will reverse and test the bottom of the balance, or at least the lower edge of that range. It doesn't have to be the exact bottom. So from there, bigger picture, the market shifted. Sell side was now in short-term control as well as long-term control, and we got this move all the way down towards the bottom edge of the balance area where responsive buyers were active on first test. So this is really the context that we're dealing with right now. It's a range-bound sideways market. It has attempted to go lower a couple of times. It has failed to do so. So far, we are stuck within this range. And down here, around the 89 and the 94, and specifically the 97 to 1900 area, those are areas of support where, absent any heavy selling, the buy side can be active. And we've seen that so far. But, the more times you test the bottom of a balance, the more likely it is to give way and actually break down. So, this is really an inflection point down here, right? We can see it on the daily chart, very clear cut, bottom of a range. And now, if we're going to head lower, and the short-term trend is down at this point, if we're going to head lower, then we do need to see that strong downside momentum. We need to see the panic selling below the balance, because as soon as you start breaking these areas, if you start breaking these areas, you can bet that there are a lot of stops underneath here that will get triggered, and then it can be kind of a cascading type move where you're just kind of triggering more and more stops, and people are just dumping their position. But this is the area that is in play right now. This is really the focus of the market right now. So that being said, let's jump into the zones for today. So one of the levels that's going to be important, at least short term off the open, is going to be the overnight VPOC around 06 half. It doesn't have to hold to the tick. There can be a little bit of play around the overnight VPOC, but holding above it would tell you that there is a level of stability in this market, and breaking below it would mean that ES can go down and retest the 97 quarter to 99.75 initial support zone. Again, that is an area where the buy side can be active on first test, but if we're going down on heavy volume, heavy momentum, then it's probably better to skip that because longs down here are counter to the short-term trend. They are counter to the larger time frame trend. So you really have to get good location in order to really ride that trade out and get something decent out of it. Otherwise, you can be stopped before the move actually plays out in your direction. On the upside, we have short-term resistance here at 12.5 to 14.5. Holding below it would just be an indication that the sell side is still in pretty firm control. Above that, we have the prior close at 19 quarter. Initial resistance 21 to 23. That's still an area where sell side can be active. And above that, 29 to 31.5 is pretty decent resistance. It's the overnight rejection spot, and also the IB low and the intraday balance low from Friday. So it's a pretty key area on the upside. And again, sell side can be active at pretty much every zone along the way because of the fact that they are in control on multiple time frames. But right now the market is very range bound. It's very balanced. So if you're not seeing any heavy momentum one way or the other, then by default we're going to give more edge to sellers, at least in the middle of the range and at the resistance zones. But in order to really put in a decent break below 97 and below 89 to 91, you are going to have to see some pretty decent downside momentum and a lot of weakness across the broader market. The Russell has been fairly weak. It's more or less been leading on the way down, but we're getting a little bit of stability in that market too. So right now the markets are kind of balancing near the lower edge of that larger time frame balance that we looked at a bit earlier. And again, the more you balance there and the more you keep on kind of hammering away at that support, eventually it can give way. And then when it does, it can be a pretty decent, flush below that area. And when you get that flush, it's going to happen on some strong downside momentum. So if there is absent downside momentum, right? So if the market, let's say, goes down to 97 or even goes down to 89, 91, and you notice that, there's really not any panic in the market. There is no real momentum behind the move, like the tick is only maybe minus 900 or minus 1,000, something like that. Then it tells you that this could be a failed breakdown attempt, and it can catch the sellers a bit off guard. It can trap actually sellers below the initial support zone. So that's one scenario to keep in mind. Aside from that, if there's no momentum one way or the other, or just kind of balanced momentum, then we can continue balancing within a range where we get reactions at the support resistance zones. But once you break one zone, the market tends to go to the next one before sellers or buyers step in again. So as an example, let's say if you break below 06 half, then you may not find buyers in the market until 97 quarter to 99.75. On the upside, if you break out above 12 half to 14 half, you may not find sellers in the market until 21 to 23. And similarly, if you break out above 23, the next key spot is 29 to 31 half. And typically you get those zone to zone moves when the market is in a very balanced state. So right now we are still going to be a bit more active on the short side as long as we're not seeing any strong upside momentum. Because again, when the market's in a balance, it's range bound, right? It can go up to 21, 23, it can go up to 29 to 31 half and still eventually reject and fail over there. But given that the sell side is in firm control across multiple time frames, still makes a bit more sense to be more active on the short side, be a little more cautious on long setups, especially because we've already tested this support a couple of times here, and to just be more aware of trade location if you're going to go long. And if you're not getting ideal location, then you should definitely have momentum in your favor. And if you don't have that, then it's going to be a very risky trade for the buyers. So for now, the focus will still be more on short side plays unless there is strong upside momentum. So we have to see something on the upside to really consider taking a long, or we have to get very good trade location where just based on the location being so good, you can get short-term edge in the marketplace, and at least it buys you some time. And even if that trade's not going to work, it'll give you 5 to 15 minutes to figure that out and then make your next move, right? So that's the context we're in. That's the type of market we're in. So off the open, again, keep an eye on 06 half, 12 half to 14 half will provide a very short-term gauge on which side is in control. Above that, 21.23 is important, 29 to 31 half. On the downside, if you're breaking down on decent momentum, then you could go down to 89 to 91. And if it's a complete, balanced breakdown, trend down type setup, then you could go even lower. But that is what would be needed to go lower. So absent trend down conditions, you can get that failed breakdown attempt, right? So you have to be a little more aware of that idea too. So those are the main thoughts heading into the open. Let's see if the market does actually trend or if it just continues to remain in a balance. Keep an eye on the NYC tick. It's going to provide a good gauge of momentum and which side's really pressing, and we'll take it from there.